How much scope will there be for aggressive monetary easing following an opposition win in Japan this weekend? And how much lower can the yen go because of this?
Yeah, in our view, I think it's highly likely that there will be a further monetary easing. But we only expect a moderate increase in easing after the election. And this is because we think the Bank of Japan will be pushing back the political pressure and it will continue its current incremental approach in terms of policy, probably until next April when the new government is coming on board. So our expectation suggests a potential disappointment regarding the pace of yen decline. So we forecast the dollar yen will get back to 81.5 by the end of this year. But we still forecast a weaker yen next year toward 85 by the September next year.
Beyond the election, what other factors are going to drive dollar yen? What direction will it go in?
I think very importantly, it is the gap between the U.S. Versus Japan bond yield. We think the U.S. bond yield will start to rise into 2013, and that's probably will be drive yen weaker. So this is one of the major reasons that we expect a weaker yen into next year. It's not necessarily because of the monetary policy in Japan, because the U.S. is also having its quantitative easing, which is probably stronger than the Japan's monetary easing.
In turn, you're seeing more risk appetite for Japanese assets, namely equities. Which sectors?
We are currently neutral on Japan equities versus our benchmark, but we still expect pretty good returns from selected Japan equities. Of course, the monetary policy easing will be helping. If the monetary and fiscal policy prove to be much more aggressive and the yen is much weaker than we expected, then the market will have a bigger rally. But other factors will also support the Japanese equity as well. One of our themes for next year is that we expect a cyclical recovery for the global economy, and that Japan will stand to benefit because the market is well represented by cyclical stocks. So we will focus on leading exports in technology and the industrial sectors, as well as buying the companies that will benefit from government's effort to reflate the economy, such as the banks or real estate sectors.
Assuming this cyclical recovery has a positive impact on Japan, how soon then before Japan gets out of its technical recession?
I think Japan's economy is clearly struggling and is unlikely to recover until next year. So we think the global economy, a recovery in global economy is the main driver for the Japanese economy. But we also note that although the economic backdrop for Japan is pretty weak, recent data also shows that it is at least not getting any worse. So we think early next year, in the first quarter, there's probably will be a recovery coming for the Japanese economy. But the major downside risk for Japan is its territorial dispute with China. If there's any further escalation of this dispute, then Japan will suffer.